Welcome back. If you joined us for part one, I'm so glad you're here for part two. And if you're just jumping in, you may want to go back and start there. Either way, let's dive in.
So when we define like angel investing, for example, the most simple definition is that it is somebody who is investing in a private company. So we hear all the time about public companies. We hear about the big guys, Apple and blah blah blah. Right? And they are all traded on a public stock exchange. And they get a lot of press because they're big and they get a lot of press, right? There are way, 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 way more private companies in the United States than there are public companies. So investing in a private company, that's the simplest definition of angel investing. And I'll add the caveat with angel investing, it's you're using your own money, as opposed to with venture capital, you're using somebody else's money. You're pooling money together in order to, we could have a whole other episode on that. We'll talk about that later. But I say that because it's important that people realize that, investing as a whole is something that they can do and that they are able to try out at these lower dollar amounts. Like, I just love this idea. Like, equity crowdfunding wasn't allowed until 2016. So it's only been around for 10 years. So think about like people are just now starting to like learn about it, know about it. So yes, it's a risky asset class, but you should really be thinking about it as I could make, some investments for $100, you could make 10 investments and you'd still only be out $1,000, which I'm not saying $1,000 is nothing, but that's for 10 companies, for exposure to 10 companies. I mean, if you look up what the odds are, typically you'll at least have 1 out of 10, and maybe could at least get you the money back of what you invested. So, and then there's of course lots of other upsides. You could read all the stats that are up on the, out in the world, but really what we're trying to do is say, hey, if this is something that you're interested in, if you really do want to start to see different innovations in the world, we have to start to get behind these companies. And I do believe, and some people may disagree with me who are out there, but I believe that the more people that start to become investors, that will actually start to de-risk for a lot of us, because now the companies that are really trying to do good in the world have the backing at multiple stages of their existence. Because what ends up happening with a lot of companies is they get to a certain point, and there's a lot of people who are very enthusiastic when they're first getting started, but then once they need those bigger dollar amounts, there just aren't as many investors that are out there to be able to do that. So imagine if there were more investors. Well, if there's more investors, it seems pretty logical that there could be more capital, so that then these companies could get past this place of like, oh dear, I'm probably either going to need to raise more capital, which I'm having trouble doing, and I think I might go out of business.
And something I would like you to explain for the readers. You said equity crowdfunding. Can you explain to the readers what that is and how that's different from angel funding or VC funding, for assuming anybody listening is really beginner and new at all of this?
Oh yeah, sure. Yes, I have a whole chapter in Do Good While Doing Well on what this actually means. So a lot of people have heard of Kickstarter or Indiegogo, and that's crowdfunding with rewards. So imagine like you're going to buy something, you're like, hey, this is a really cool thing that I want to buy, and it's not made yet. So in a lot of cases, people will start a Kickstarter campaign because they'll want to say, hey, I want to go make this. Will you buy it ahead of time? And then you have to wait like 3 or 6 months or whatever the story is in order to get the product, right? That's rewards-based crowdfunding. We've also heard of donation-based crowdfunding, which is like GoFundMe. So, hey, somebody has some terrible thing that happened to them or whatever their story is, and you want to help them through a GoFundMe campaign. That's donation-based crowdfunding. So equity crowdfunding means that you can go and actually get ownership, part ownership, actually have equity, meaning that equity means that you have some level of ownership in a company. Founders have equity because they're the founder and they're kind of doing the sweat equity. Sometimes you hear that term. An investor who invests money will invest money in return for equity, meaning they have some kind of a percentage ownership now of the company. Now, with equity crowdfunding, you're able to market this the same way that you would a rewards-based or donation-based, but you can do it, and now the people who are actually in the crowdfunding campaign will have some level of ownership into the company. Now, mind you, it's a very small percentage of ownership, but you can start to have your customers become your investors. And then sometimes you'll even have your investors become your customers. So I love this for people or for companies that have a product or a service that is B2C, as we call it, business to consumer. And that way you can really start to test the market. In fact, there's been a whole kind of turnaround. I won't even go into like the history of it, but venture capital firms are starting to ask companies before they come and pitch to a venture capital firm to actually do crowdfunding so that they can prove that they can sell the product and to prove that there are people interested in having the company be around.
Interesting. And I do think crowdfunding is a really good way to gauge, are people interested in this? Can we get backing? Are people going to care? If I get all this VC funding, are people going to care at the ultimate product or service that I'm offering once I've gotten the money? I think that's a great, I'm glad I don't know if I want to stretch to say glad, but I'm glad that that is becoming popular, because I think it's a great way to kind of gauge, like I said, where the interest is, and if there's support, in whatever you're providing.
Exactly.
You've spent years working to expand access to capital and support women-led companies. Yay, you. What are the biggest barriers that still exist for women, both as investors and as founders? I'm really dying to hear what you have to say about this.
Oh my gosh, there's so many there's so many things I could say. I would say the number one thing is that, and again, I'm generalizing here, this isn't all women, but women tend to play small. And I mean that from a founder's perspective and from a funder's perspective. So founders, in a lot of cases, and I've heard this from many male investors, that they're cautious about investing in a female founder because they think that she will be too conservative. She will be too conservative with her revenue. She'll be too conservative with her marketing. She won't be able to grow and scale the company the way a man could because she's too concerned about making sure all of the things are in the proper, way, everything's lined up perfectly. And as women, we do tend to want to do that. That's like in our nature. But I have seen a lot of women overcome that because they see the growth potential. In a lot of cases, these businesses, these industries, they really need. The problem is so bad. It's so sticky. It's horrible. And you could go into all different types of things, especially around women's health. And if there was a better solution, how amazing would that be? And how big of an opportunity is that? And when I think when women start to see that as founders, that's when they do really start to move out and they are able to grow and scale their businesses. And then from a funding perspective, again, I just think it's like, I heard so many women tell me this and I totally, totally get it. But a lot of women said, as I was talking to them about their money story, they said, you know what? I have so much to do. I've got my job. I've got the kids. I've got that, I just want my husband to be able to do something. Like, how about he just do, it was looked at as a chore.
Mm-hmm.
How can we make sure that this chore gets done? Well, we're just going to give it to my husband. But what happens is, okay, that's fine for, a little while, maybe a year, maybe 2 years. But what happens, like 5 years goes really fast. And then, it's like the days are long and the years are short, right? And then then next thing you know, like 10 years have passed. Well, that's 10 years that you could have been investing and doing other things with your money. And I'm not saying your husband in this particular scenario isn't doing that, but I've had a lot of people who, and the book hasn't really been out that long, but I've had people actually come to me who've read it and said, I started having different conversations with my husband. And it isn't that they're saying to their husband, hey, you're doing a bad job. No, not at all. I'm sure the husband's doing a fabulous job. But we want to make sure that we're in the conversation. Do you even know what you're investing in? What if you have especially if you have a financial advisor, do you understand the fees that you're paying to that person? Maybe you're not paying terrible fees, but in a lot of cases, they're going to put your money where they get the best return for themselves. So know all that. I talk about that in Unapologetic Wealth. We just need to make sure that we are in the conversation. I'm not saying you have to do it. You can totally still chore that out to your husband. but have a monthly meeting. It could take 30 minutes and just know what you're doing with your money, how you're growing it, and what you really want to do with it. We say, oh, money, are we just watching numbers in a bank account? Well, that doesn't really make any sense. We should be talking about wealth in the way of like our time, our health, our relationships. These are all forms of wealth. So what is the wealth? What is it that we really care about when it comes to wealth? What is the wealth that we really care about?
Absolutely. Absolutely. And also, quite frankly, having the conversation with your husband is outstanding, but also there's so many women that are now divorced after 20, 30 years, or their husband died, or they were a corporate girly and they never had a husband. And so these conversations are great to have with your husband, but also we need to be having these conversations with ourselves, because
Yes.
you're right, 5 years goes by like, I think back now on my 20s and 30s and into my 40s, and how that investing or not changed over time, and how much powerful it would have been for me had I been thinking or hearing about these things in my 20s, or even known about them, which I didn't. I didn't have the same relationship with money that you had, growing up. And it took me a long time to get anywhere, and I'm still not as in a wonderful place as I'd like to be, right? I think you're always trying, hopefully trying to grow and get better and do better. But it's also interesting as a founder, coming from heavy tech and construction background where I worked with all men, and now being the founder of a company that's celebrating women and connecting women and lifting up women's companies and businesses, and women in general. It's really interesting because I've known VC funders, I've known angel investors throughout my career. And when I started this company and started this process, it was really interesting how many men immediately wanted to give me money and were like, we want to invest, we want to invest. And I'm like, well, it's a woman thing. And I really appreciate the support and love it. And please buy a shirt or a hat. but but quite frankly, I really only want to take money from women if they want to support that. That's the whole point of this company. It's not that serious. And what I'm doing is really about lifting and celebrating women and connecting women within a network, and to say to women, we have a safe space and we can support and lift each other. And it's not, again, like you said earlier, it's not because I don't like men, or it's not a man bashing thing. I love my guys. They're fabulous. But it's about reflecting to women that this is a thing and that this is a universe we can live in. Men have had the old boys club forever. We need the old girls club. We need that coming in hot. And what's really interesting is, even though I feel very passionate about this and am living in it and doing it, it is really interesting to see women hesitate or not know what to do or how to support, or versus the men that are just like, hey, you need money? Like, yeah, we want to invest. Versus women like, I don't know, like, what are we doing? And so that's been a really interesting, eye-opening thing for me, because I am a very big proponent of supporting each other, lifting each other. I mean, obviously, but it's really interesting to see that as a founder, who's willing to invest or who's willing to back it. Just from my own experience, it's really an interesting, I don't know, maybe a case study here.
Yeah. Yeah, I mean, we could go on in a whole other episode just talking about all the different ways to finance or a business, or especially a startup. And in a lot of cases, I hear entrepreneurs too often say, "Well, I just need to raise money. I just need to raise money." And I'm thinking to myself, okay, well, do you actually need to raise money right now, or do you need to actually prove out your proof of concept? And could you do that with a crowdfunding campaign? It doesn't even have to be for equity. I always encourage entrepreneurs, especially at the very beginning stages, do a rewards-based crowdfunding and see if your product is really viable, if that's the way they're going, if it's an actual product like that. Healthcare, you get into a little bit different, it's a different animal. But, start with that. There are now ways that you can get capital for your for-profit company using philanthropic dollars. And I talk a lot about this. I have podcast episodes about it. Melissa Houston wrote a Forbes article for me about it, talking specifically about using philanthropic capital in order to. Hold on, I'm sorry, you're going to have to take that out. It's Jerry Stengel wrote the article.
Time out. Hold on. Let me write this time down
Okay.
so I can correctly. Okay.
All right.
We'll edit it.
Perfect. So I've done a lot of podcast episodes related to this. There's a Forbes article written about it, about using philanthropic dollars in order to invest in for-profit companies. And the reason I am so excited and want to talk about it to the moon and back is because women, as women, we do tend to be more comfortable with philanthropy.
100%.
And so I believe we need to meet people where they are. And in a lot of cases, women are being more comfortable with philanthropy. They are willing to say, wait a minute, I could actually use money in my donor advised fund, which is basically like a philanthropic checkbook. And I could use that money before it actually goes to the final destination, which is the 501c3 charity. It could actually go to a for-profit company. So like all of these things are ways that an entrepreneur could start to raise capital before they would ever have to take on equity investors. And so I always encourage entrepreneurs, just learn about where capital can come from. There are lots, they call it a capital stack. There's lots of different types of capital out there that you can stack onto your company in order to, get your company's business to a point where you are able to be flush with cash. If you just think to yourself, oh, I got to raise money, and that you do kind of come across as desperate, and you're not really attracting the right investors.
That's really, really valuable knowledge. I mean, I didn't even have any idea about that. And I love that that's why it's so great talking with you. And it's so great for other women that are trying to start businesses to understand what the possibilities are, because there are so many possibilities. And I think we kind of pigeonhole ourselves into thinking, oh, it's got to be this way or that way. And, I'm sure a lot of other business owners would be like, heck yeah, if some guy told me, give me a loan or be an angel investor, I'd say, heck yeah. But I think that just understanding the possibilities of what's out there and what you can do, and it may not be the normal, quote unquote, the normal way of going about it. It might look a little different. It still works. It's still great. It's still out there. It's still an option.
Yes, 100%.
So for someone listening who has never invested before and feels like, ugh, it's not for me. Two questions. Where do they even begin? And when do you think, it's kind of a weird two-parter, but when do you think women start to internalize the belief that money or investing isn't for them? Like, I know it's kind of a weird two-part question, but where do they begin? And when do you think women are internalizing the belief that it's not for them?
Yeah, so it's relatively easy to begin. And you, again, if you don't even want to use money, you don't have to. I would encourage people. There is entrepreneurship happening in every city and every town. So go find out what's going on in your own backyard. I mean, that's what happened to me. I was invited to a meeting right in my own backyard. I was living in Pittsburgh, and I got to meet entrepreneurs and find out about things, and that's how I ended up getting involved. Now, you don't have to invest with your dollars, at least not all the time. You could actually invest with your time. You could invest with your expertise. I have a lot of examples in Do Good While Doing Well talking about that, because in a lot of cases, people have a level of expertise. Maybe they're retired, or maybe they're close to retirement, or maybe they just, want to do something on the side, to help another founder. They can do that and get involved and not necessarily have to put up any capital to begin with. The other kind of fun thing that I like to do, and I think this is a great family activity, and this is in the workbook that goes with Do Good While Doing Well, but you don't really need the workbook if you don't have to. God, I'm a bad author. I should really be pushing my stuff more. I'm really terrible. I'm just like, no, I'll tell you how to do it without the book. It's to look at one of these equity crowdfunding sites and make a mock portfolio. Like, you don't even have to necessarily invest even the $100 if you don't want to. But I loved this activity with my stepkids because we would talk about companies that were raising money. We would look at what they were doing. We would talk about the why would we want to back that company over another company? And the type of dinner table conversation really starts to change. And I love it when you start these conversations at a young age, because then they'll start to be like, huh, yeah, I remember talking about that. I remember thinking about what it was like to, about, it could be with the stock market, it could be with private investing, but these are fun ways that you can learn without it costing you anything.
I love that idea too, because you're taking, like, if you look at the crowdfunders that you're just talking about, you're taking actual things that are real and you're just talking about it and you're making it more comfortable. So at some point, when there is the money, and if they want to, if your kids want to, they get older and they go, you know what, I've got $1,000 or I've got $100. And instead of just thinking like all the crap they want to buy, they start thinking about, well, you know what would be cool? Instead of those pennies, like what if I invested in this thing? I remember when we were talking about that at the dinner table. What a good idea. What a good idea, especially using actual companies and crowdfunders that are happening right now, because that makes it real and tangible. And it makes it so much less scary when they do actually have the money to then go do that themselves. I love this idea so much. This is such a good idea. We're getting all these good gems from you. We may have to have you back on for part 2, for part 3 and 4, I should say.
That's right.
Okay, so what you're building now, you have built an incredible platform across investing, writing, speaking, books. I mean, we've talked a little bit about them, but please, this is where we want to tell. And by the way, all of your content, all of the everything will be in the show notes so people can find you. But all things Marcia. Marcia. So tell us all about what you're doing and where we can find you, and give us all the good information.
Okay, so probably the reason why I'm not the best self promoter is because I didn't set out to become a podcaster. I didn't set out to become an author. I literally, I didn't even set out to become an investor. I got I kind of fell into it. I was given opportunities to learn and kind of use my own capital to make the mistakes. And then I just saw the need and I thought, well, okay, we need more funding to go to female founders. That to me is like my number one goal. Like, how can we get more female founders to get the funding that they need? And I believe that we can't get that funding to the founders until we get the funders to look like them. So if we could get more women to become funders, we will get the money to the founders. Okay. So, how did I didn't ever think, oh, I'm going to just start a podcast. No, it kind of came out of necessity. I'm trying to explain things to people and they're like, well, okay, you're talking, you're saying a lot of words. I don't really understand all the things you're saying. Like, could you just give us some examples? And so the podcast is called The Angel Next Door. And if you think back to the book, The Millionaire Next Door, it was kind of a play on that, because it was about, hey, you could actually, your next door neighbor could be an angel investor. You could be like, it doesn't have to be some big, rich, crazy person, it just,
Right.
it could be anybody. And so I started the podcast by just interviewing really my friends. And I would say, hey, will you just come on and like, tell us like, why do you do this? And where did you learn about it? And what was your first investment? And where'd you get the money? And like all of these things, like all the questions that people have about it. And then now I'm up to, probably close to 200 episodes or something. And I just started adding on. I started saying, okay, oh, you know what? Equity crowdfunding. Nobody knows what that is. Let's have like multiple episodes, do a whole series on equity crowdfunding. So I got 2 entrepreneurs to come on who had raised $750,000 or more on an equity crowdfunding site and tell us, how did you do it? What happened? Because I have investors and founders that listen to the podcast. And then, really just tried to philanthropic capital, all of the things. Then it got to a point where then I would talk to people and I'd be like, okay, so there's a podcast episode on, and they'd be like, again, they're like, their head spinning. They're like, what? And so on my website, I actually have them categorized. So if you want to listen to the episodes that are just about equity crowdfunding, you just hit the button and all of the episodes for that come up. If you want philanthropic capital, like we were just talking about, all those episodes come up. So like, I've really tried to make it super simple. And of course I don't make any money on the podcast. Like, I don't have sponsors or anything like that. It's just how it goes. Anyway, then I got to a point, I spoke at TEDx Charlotte. People heard the TED talk and they were like, oh my gosh, this is great. We still don't really get it. It's 11 minutes. Like, come on, what else you got?
Right. Right.
So I took the information really that was in the TEDx talk and said, okay, I'm going to put it into a book. And I had an amazing writing coach, AJ Harper. I highly recommend. She has a book called Write a Must Read. If you want to write a book, you have to get her book. You absolutely have to get her book. It's only like $25 or something like that. It's the best $25 you ever spend. So wrote the first book, and then I was like, okay, I am done. I did the podcast. I've got the book. Awareness. We have demystified the state.
It's all done. My work here is done.
My work is done. My work is done. Okay. But clearly that's not true. But then when I started talking to people and they started talking about this money mindset, I'm like, oh, geez, okay, here we go. Like, we need a prequel book here. Okay. So, and that's why Unapologetic Wealth was written, because I just thought we have to get women out of their own head, take agency over your money, and like really start to live in alignment with your values. So the first book, or Unapologetic Wealth, which is like kind of the prequel, the first in the series book, is really not about investing at all. It's about using your money as a tool, not necessarily as an emotionally charged crazy thing in your life.
Okay, so we can go to your website, find it there. Tell us your website again.
My website, just my name.com. It's very nice that my husband, he's Pakistani, and so Dawood is his name. Marcia is a very American name. So there's nobody else named Marcia Dawood, which is really nice.
All right, you heard it.
So I got all the things, all the handles, Instagram, TikTok, everything. It's just my name.
All just your name. Perfect. And your podcast is on all of the, find it on all of the ways? Okay, perfect.
YouTube. I have a YouTube channel.
Wonderful. Okay, so I will be immediately, I know what I'm binging this weekend, so I hope everybody else knows what they're binging this weekend. You can, again, you'll find all of Marcia's information in our show notes, so you can easily find it there. Okay, we're getting close to the end. I've got a couple more questions. You've done everything from investing in startups to teaching yoga to teaching in India, which is amazing. What has the experience of stepping into something completely different like yoga taught you about yourself?
Yeah. Okay. So, well, with yoga, it's funny. I love yoga. I've been doing it for like 20 some years. And when I became a teacher, I was kind of like, I like to do the yoga. I don't really want to teach.
I don't want to teach. I want to do.
I want to do it. Because when you're if you're, and I know many great yoga teachers, but they're like not doing it with you. They have their own practice, and they, but I'm like, wait, I don't have time for all of this. I can't be like, working and doing my own yoga and then becoming a teacher. So I kind of got to a point where I was like, I think I just learned something about myself. I want to do it, not necessarily teach it.
Well, I think you are a perfect example of a doer. You've showed us that with your books, with your podcast, with all of the things. Okay, so at It's Not That Serious, we have a series called our WHIP series, which stands for Women in Power. And it's a series we do once a month on the website. We highlight a different woman who's a total badass that we're highlighting, but it's not really a career highlight or a resume highlight. It's about something tough that she went through and how she got through it. So when you hear the words Women in Power or WHIP, Women in Power, what, obviously that can mean many things. So what does that mean to you? What does Women in Power mean to you?
Yeah. So I've seen so often where women are not taking control of a situation, and it doesn't, and in some cases they can't. And I want to make sure that that's acknowledged and respected. But in a lot of cases, it can be where when we talk about the word empowerment or power, I think about how can we get there to be more equality, more of a way that we can start to see the things that women really want in the world, that innovation, those things in women's health. How can we get that to be a reality? And the biggest way that we can do that is for women to actually step into that power role. And in a lot of cases, as for everything that we just talked about for the last hour, it is around using your money to align with your values. And maybe that doesn't mean that you're going to invest in anything or whatever you're going to do, but just know that you have the power to take a look at your entire financial situation and use your money to build wealth, and whatever that means to you when it comes to wealth, time wealth, health wealth, relationship wealth, all the wealths, so that you can live the life that aligns with your values.
Love it. Well, thank you so much for being on the show. So happy to have you. We, again, will put all of Marcia's information in the show notes, and please go to the website, check us out, check out all the women-owned companies and women-led companies that we're lifting up with It's Not That Serious. Get a mug, get a shirt, whatever. We are so happy to have you here. Thank you so much for being here today. We'll see you next time. That's a wrap on today's episode of Carrie, It's Not That Serious. If this conversation resonated, subscribe and share it with a WIP, a woman in power in your life. You can find more conversations, more community, and all the fun INTS merch you love at itsnotthatserious.com. We're building something meaningful here, and I'm so glad you're a part of it. Until next time, remember, it's not that serious.